All right. Good morning, everyone. I'm Todd Sumney, the Chief Industry Officer for HomeSmart International, and so excited today to bring you this awesome session on financing options in California. And specifically, right out of the gate, I just want you to know that I see two major applications right away, but I'll let Nam explain all of those to you in a minute. But immediately, right out of the gate, just when someone is considering taking an iBuyer offer and they are considering selling their home at below market value because they don't have funds to fix it up, maybe put some carpet, paint, repairs, whatever they might need. This is the perfect solution for you, the real estate agent, to come alongside, bring this opportunity then to the customer and basically secure the funds to make those repairs, those upgrades, then put the home on the market at top of the market value, then sell the home, and then at closing, then those funds are paid off right away. So love that concept. The second one is, with inventory being so tight and people searching and searching for a long time to find a home, and then when they find that perfect home, they want to, they have to turn around and sell their home. So some sort of funds that would basically allow them to purchase that home and then put their home on the market, sell it, and then square everything up after that. So love all of that. Nam would love to turn your video camera on, say hello to everyone. I want to introduce myself. I'm Todd Sumney, the Chief Industry Officer for HomeSmart International. Welcome to today's Expand Your Brand webinar, all about unique lending opportunities for California real estate agents, and would love that. So let's see here. That's not an option. Okay, so Nam, you're not going to be able to turn your camera on today. So, but Nam, I would like to welcome today Nam Phan from Pacific Private Money and have Nam come talk to you today about all of these opportunities. And Nam, I'm going to actually turn the controls over to you so you can take over, run your PowerPoint from here on out. So say hello to everyone.
Hello, can everyone hear me okay, first of all?
I can, we can hear you.
Okay, awesome, awesome. And I'll go ahead and share my screen here. Actually, or you have to share it with me, is that right, Todd?
Sure, let's see here.
Controls.
I just sent you an invite there, Nam.
Yeah, let's see here. Share screen, yes. Okay, here we go. All right. Can everyone see my screen now?
I can.
Okay, awesome. Thanks. Thanks for the intro, Todd. Your overview pretty much stole my thunder, so I think we're done.
Okay.
I'm
Awesome.
I'm gonna go into a lot more detail. Again, my name. Thanks for allowing myself and Pacific Private Money to present to California HomeSmart franchisees and realtors. It's been a crazy 60 days, and I'll give you some background on what we're seeing on the private lending side, and also, sort of residential real estate at large. And I'll talk about that as I go through the presentation. But specifically today, I would love to talk to you all about what we do or what options are available not only for homeowners or home buyers in today's market. We'll go through some stats, some market stats in California, but also what are the opportunities for realtors? How can you take advantage of what's going on right now where you really can't do business the same way, but then what's going to happen once everything frees up? Because there's, as you probably are reading, there's going to be a lot of pent-up activity. There's activity now for the most serious people, whether they're buying or selling, but there is a lot of activity that's going to happen in the next few quarters. So we'll talk about that. But I'll start out first with just an overview. Pacific Private Money, we're alternative lenders. We lend. An alternative essentially is hard money, private money, non-QM. You'll hear that term increasingly. But we provide loans to home buyers primarily residential throughout California, some commercial, for all different kinds of reasons, whether it's ground up construction or people who are, buying to flip, what have you. But increasingly, we're seeing homeowners who have a ton of equity and are looking to move up or move down, but feel stuck. And then, with iBuying increasingly being promoted out there in the marketplace by companies like Zillow or Opendoor or Redfin, they're creating this opportunity for homeowners to be able to quickly liquidate their property in order to move on to the next one. But we'll talk about why and how you can compete against that, and why iBuying is not all that it's cracked up to be. So it's a good opportunity for you to learn about this, so that when you're sitting with with a seller on a potential listing, you have more resources available to compete against the iBuyers. So we're going to talk about buying before selling. Buy before sell option exists in a number of ways. We call it a bridge loan, we call it transitional bridge loan, but essentially it's a loan that allows that homeowner to be able to purchase, as Todd said, their next home before selling their current home. We'll talk about how you do that. But essentially, there's inventory is still tight. It was tight before, but starting to loosen up before this, but overall it was still, I would say, in many markets, sort of a balanced market or more of a seller's market. But it's tightened up even more because people are holding back on selling until they figure out what's going on. But so right now you have a tight lending or tight real estate environment, and two, lending has tightened up even more. So homeowner who goes to Wells, goes to B of A, goes to Rocket Mortgage or any conventional lender is going to have a hard time today qualifying than they did 60 days ago, which was already harder over the last several years because of Dodd-Frank regulations. All these regulations came into place where essentially a large pool of what we would say are just no-brainer borrowers were sort of they lost the ability to get bank financing. So that restrictive lending has created a lot of pent-up activity on the residential real estate side. So we'll talk about how to sort of free up that or loosen up that inventory. So that's, again, because of tighter bank regulations, that's led to the growth of iBuyers and other real estate models, some of them where they're going to buy your next home for you and then rent it back to you. We're seeing those companies come out as well. So you guys need to arm yourselves with programs that maintain your central role in the transaction. Because essentially, traditional real estate sales still is the simplest and most straightforward path for homeowners to be able to really maximize their profit and not give up that equity or the ability to stage the property and get a higher sales price on their department.
And Nam, I don't want to get ahead, but I know that you and I, we've talked, you've pulled some numbers for me about the number of homeowners in California or in a couple cities in California. Just as a sample, you pulled some numbers about amazing amount of equity that people have in their home, where they own 50% or more of their home, or
yes,
they own 75% or more of their equity in their home. So in other words, their home value is worth $1 million and they only owe $250,000. And there's 75% of equity sitting there. So
yeah,
that's where I agree with you. All the indications from what we're seeing, even just in the last week, is that when some of these restrictions start to happen, we need to be prepared and ready for a lot of the movement and activity that's going to happen in the marketplace, right?
absolutely.
And especially there in California, where all that equity is just sitting there in homeowners' homes, and they're going to want to move. And that buy-sell option is awesome.
Yeah, and we'll pull up, to your point, Todd, we'll pull up those stats for many of the California counties in some upcoming slides. So,
awesome.
So yeah, everyone can see some of that. I'm sorry too, though, that I don't have every slide. I don't have for every county. I don't have Sacramento County in there, so I can pull that up separately and send that to anyone from Sacramento or Central Valley who wants that.
Well, I do see Todd Priest from Modesto and Fresno on the call. So Todd, big shout out to you and all your agents. Great, glad you're on the call here today. But go ahead, keep going, Nam.
Oh yeah,
yeah,
yeah, and yeah. Hello, Todd. Good to see you. Todd chatted and said hello earlier. So
awesome.
Nice to see a familiar name on the audience. So why do you want to leverage a bridge loan? I mean, why would you want to? Number one, as a realtor, you want to so you can stay in the middle of the transaction. But why would a homeowner want to leverage a bridge loan? To tap into that equity that they have in their current home. But for a realtor, it's unlocking and creating inventory in your market. And we'll go, why is there hidden inventory or inventory sellers, homeowners who aren't in the mind frame of selling yet? And we'll talk about why that's the case. There's a lot of reasons why, but it'll help you get listings that can sell for a higher price. And you can create multiple sales from a bridge loan. And lastly, you can compete against the iBuyers. So, when you're sitting in a seller's home and you're talking about, listing their property, oftentimes one of the questions you ask them is, have you found your next home yet, or have you started looking? And oftentimes the mindset of that homeowner is, well, no, I haven't looked, or we've been going through open houses, just to get an idea of the homes in the neighborhood or that we want to move to, but we probably have to sell this home first. And that's kind of misconception number one with them. Or they'll say, yeah, we are looking, but we're thinking about listing first, and we're looking at Zillow because they offered to buy our house and close within 3 days. So that's something you have to contend with. But if you say, you know what, you can buy your next home first, and here's how, and we'll go through the details of bridge loan in a second, that should free up that perception that they have to sell first, and that they can accomplish the purchase much sooner than 6 months from now, which is oftentimes the time frame they give themselves for selling their current home. So you say, you know what, you can actually start looking for your new home now, because with a bridge loan, you won't have to worry about selling your departing residence.
Perfect.
That's number one.
And there's a quick question. I don't know if you're going to get that in a moment in one of your slides, but one of the questions is, does this work what if you have a customer who needs a bridge loan on a second home?
Yes, we can. So we can do second home purchases, and actually in one of the success stories, which I'll share with you guys, I have 5 different success stories, scenarios that I'll cover. One of them is an older couple who bought a second home, and how did they accomplish that without having to sell any of their other homes, including their primary residence? So the answer will be yes, and we'll get to that definitely. So unlocking and creating inventory in your market. So if you have a listing and you're holding an open house, somebody walks through, oftentimes people walk through, they don't want to engage with you, they want to just explore on their own, and so they walk around and look. Some of those people are there, they would love to buy that house, but they don't think there's any way they can, because they're still in their home, they haven't even thought about listing. And there's so many looky-loos that just spend weekends going through open houses. So what if you had a way to communicate with that person where you said, hey, do you want to buy this house, but you think you can't because you have to sell your current home first? That starts a conversation with that person to say, listen, if you really like this house, you haven't sold your home yet. I mean, you can still make an offer on this house without, a sale contingency, without double escrow. And the way to do that is you can get a bridge loan and use the collateral you have in your existing home so you can get this property. That way, if you can secure that person walking through your open house, you potentially have identified the buyer of your house and then your future listing for the home that they'll be needing to sell. So these are all little things that we've had, we created marketing collateral around to help you create and unlock inventory. So here's a classic example of just a move up, buy before sell. So this is in Tiburon, California. The situation is it's a young couple. This is actually kind of a funny story, but they had planned to list their home in January for $2.1 million in Tiburon. But a home literally 5 doors down from theirs came on the market in January. So they were going to originally this in June. They had just expanded their family, had another child, so they had 3 kids now in this home in Tiburon. A home 5 doors down came on the market for $2.6 million. Now they're 800 FICO score borrowers, strong assets, professionals working in the city, well qualified for a conventional loan. But even though they're well qualified, B of A, whoever is going to tell them you have to sell your $2.1 million home first, because even though you have strong assets, it's not enough to qualify to carry 2 mortgages. The reason why they wanted this home, which was literally just down the street, was because in Tiburon, every home is oriented differently. They're windy streets. They're up on, somewhere on peaks. This new home that came on the market just happened to be in a direction where you could see the Golden Gate Bridge. You could see, the East Bay. You had great views of the bay. Their house they currently live in, which is the picture you see there, was one that they just didn't have the bay views. And that's why it was $500,000 more for this home. So they said, you know what, that's our forever home. We want to be able to make an offer. This is January. We haven't even thought about listing our property. So the realtor came to us and said, hey, can you provide a bridge loan for them? They had plenty of equity. They had some additional down payment. And so we said, yes. It's going to be a competitive market though. So, you have to put in your offer quick. You're pre-approved. And so they made an offer on this $2.6 million. They got it accepted. They were competing against all cash. And the way they were able to get around that was with a no sale contingency. So it was no sale contingency. They got the offer accepted and they moved in, I think it was February or March, actually put their departing residence on the market earlier than June, and it sold in April. So, bridge loans are short term. I mean, they paid us off within 2.5 months, and we're fine with that. We don't charge, there's no prepayment penalty with bridge loans, and it's interest only. This is a classic example. All of their equity was tied in. They'd been in this home for, something like 5 years, and they had a ton of equity. But, a conventional bank would have said you need to liquidate that equity in order to use it for your new home.
Right. So
here's some of the market stats that Todd mentioned earlier. So market opportunity in California. I've got these San Francisco down to San Diego County. Sorry, I don't have all of them, but I can get that for you afterwards. And by the way, this is all Black Knight data, or CoreLogic provides the same data, or actually your title company can give you this data as well. But we've got 2 columns. One is homeowners who have 50% equity and have been in their home for 5 to 9 years. These are what we call, potential move-up buyers. And then you have folks who've been in their homes for 15 to 30 years, 70% equity, and those are potential move-down buyers. So in San Francisco County, it's 9,000. San Mateo County, 13,000. You just keep going down the list. Look at Los Angeles County, 118,000 homeowners. So nationally, since the Great Recession, today the average homeowner in the U.S. has 50% equity. So that's why you're seeing iBuyers growing and proliferating, is because they see this wave of people whose equity, whose net worth is tied up in their homes, who are a large percentage may feel stuck thinking that they have to sell first. So a total number is 408,000 just for those counties. I mean, that represents a pretty big percentage of the total, opportunity in California, but that's big.
That is big.
And this data is free from your title company. We send postcards to some of these counties to let them know about our bridge loan.
Right.
So this is the 70% equity plus, and throughout California counties, 366,000. By the way, these slides are all available afterwards for everyone. But there you have it. That's your move up buyers and move down buyers, your boomers. So that's a huge opportunity, and it's only going to grow if currently 50%, and the
But
average homeowner is
and
50%.
now I'm real quick. That is the numbers in the left column are not included in the right column, right, or vice versa. That totals together then almost about 800,000 homeowners in
Yeah,
California that have
exactly.
50% or more, right?
Yeah, two separate groups. Pretty amazing. So you're just in the Bay Area, right now, about 40% of our loan activity are bridge loans.
Right.
So, and the other thing too is, especially in the move down column, that 70% equity, that I hate to tell you, the iBuyer model is attractive to them because they say, listen, I've got so much equity, I'm okay walking away with a slight loss or getting a little bit less potentially than just selling it and putting it on the open market, the MLS, and having people traipse through my home. So some of these folks are like, I'm paying for the convenience for the iBuying, and
Right.
and that's somewhat of a reality. But the counter to that is you are leaving more money than you think on the table, because once you sell to an iBuyer, that iBuyer is going to turn around and freshen up that property and do some work on it, and they're going to benefit from the increased sales price from staging, which we
Correct.
all know
Because
improves
if
the sales
they're
price.
if they're not going to do that, they would end up not buying the home. I
Right.
mean, it doesn't make sense for them to buy the home and sell it at the exact same price, right?
Exactly.
They don't make money, so they're only going to buy homes at a discount that they can freshen up and then make a premium on. And
Exactly. And they're going to buy your home, free up that equity for you. Sure, great. You get that cash, but then you still, how are you going to rent back? If you wanted to then buy your next home, you're either moving out temporarily. I don't know if these iBuyers do rent backs, but you're sort of stuck in having, temporary situation where unless you close concurrently on your purchase, then where is that homeowner going to be sitting for a while? And plus, they can't update the home they're moving into, um, because they don't have the time, or sometimes they don't have the financing.
yeah, so now real quick before you go on to the next slide, there's a agent typed in a comment or a question.
Yep.
Hey, if the market prices are going down, shouldn't the homeowner sell the home now, take the money now, and then buy a larger home later? Is there a risk of buying now then selling later due to prices falling? So again, no one has a crystal ball, and the thing that I would say to that is twofold, two answers to that one. One is that inventory really is the key to that whole thing. In many cases, you really have to watch the inventory to try to feel what's going to happen in an area, because in many cases, indications are that prices are not going to fall. They're at least going to remain level, or no one knows, right?
Right.
And so if inventory is tight in an area, I would say maybe that risk is a little lower. I guess that's all I'm trying to say. Number two, though, the biggest thing about this is it's not going to be for every person. It's not going to be for every opportunity.
Right.
But what this really is opportunity. It's people are buying opportunity. So they might live in a home and a new home building construction goes on, and that's an opportunity for them to go purchase that new home, and they have to sell and get this equity before they can purchase that one. Or the example you gave where it's just right up the street, but it's a totally different home situated completely differently. That's an opportunity that if they didn't move, they're going to miss that opportunity. So therefore they're willing to invest in this type of activity to make sure that they seize that opportunity. Did you agree
Yeah.
with that?
Yeah, I agree with that. And also, regarding the market, Zillow put out a report that they saw maybe home prices dropping 2 or 3% over the next year. That's really low. In California, you know, California is vastly underbuilt, underdeveloped still. There's still a significant housing shortage, regardless of, what's going on right now. And so if you look at the stock prices of home builders in the US, they're high. People are betting on home building still being thriving at least in California, for a while. And to your point, Todd, with home builders, we are seeing a lot more activity with builders coming to us saying, "Hey, we have a client who needs to complete their purchase of our development, even though the project's not done yet." And so, if you have a community, a new development community in your marketplace, approach that office, and if you have a client, you can potentially secure that new project, that new home, with a bridge loan.
Right.
Because oftentimes the timing is an issue. There's one question that came in: how much is the convenience cost, or how long is the approval process? So the approval process for us, really, if we get the data on the borrower, essentially they would fill out an application, give us the address of the property that they currently own. We can do a valuation, desktop valuation, and looking at their app, we see how much equity they have and how much their income is. We can make a decision, essentially an initial yes or no within the first 10 minutes of seeing the loan scenario. And one benefit of private lenders is we're common sense lenders. We're sort of like what banks were 50 years ago, where we just wanted to understand their story.
Right.
And the buy before sell story is very easy. I own a home. I want to buy my next home first. Okay, all what we want to know is, can you afford our payment? Is the home do you have the equity that you need in your existing home? And can you sell your departing residence for what you think you can sell it for?
Right.
So we look at those things because we're short term.
Right.
And our average bridge loan is 4 or 5 months. So if we think, well, yeah, that makes sense. The market can support you selling your home for this dollar amount in the next 4 or 5 months. Typically, we'll greenlight that. That's one of the most conservative loans we do, is a bridge loan, because there's a very compelling reason why that homeowner needs to sell. And so we love bridge loans. They're very easy to underwrite for us.
All right.
In terms of the cost, we charge 9.5% to 10% for a bridge loan. It's for 11 months, but keep in mind, it's interest only. And if they pay it off in 5 months, there's no penalty for not keeping it the 11 months. And so if they're keeping it for, 4.5 months, that's essentially, 4.5% that they're paying for that time period, right? So, and they can make up for it because they have time now to stage the home that they're leaving, which with an iBuyer, you lose that opportunity as a homeowner, and you can get a higher price. So you can recoup some of the cost. And as I was mentioning with the move down buyers, boomers moving down, a lot of them, for them, it's about convenience. So with a bridge loan, they only have to move once.
Gotcha. Yep. Okay.
So what is it? It's a loan that allows purchase of a new home before selling. How does it work? We provide a loan on the new home. Benefits: no need for sale contingent offers. So essentially, as good as all cash. I know some realtors use it to write all cash offers. We don't necessarily condone that, but that's how you write the offer, get it accepted. So be it. But there's no need for a concurrent close. Only move once, and again, no need for. You can have a no sale contingent offer.
Right.
And then benefits: freshen up the new home before you move into it, the home you purchased, and you can freshen up the departing residence, get a higher sales price. Let me run through some more scenarios. This is a move down buyer. It was a couple downsizing in the Silicon Valley from a 2-story home. They were older and they didn't want to have to walk up and down stairs anymore, and their home was now worth $2.5 million. And then they bought a home for 1.75 in a gated golf community, single story, which is the one you see in the picture, which is pretty insane to think that home is selling for 1.7 million, 1.75 in the Silicon Valley. It was probably 1,500 square feet, but that's Silicon Valley for you. We provided the bridge loan. keep in mind their $2.5 million home they own free and clear. So essentially, that we could provide 100% of the purchase price loan plus an additional. I think we provided an additional 100,000 or 50,000. So it's essentially a loan for 1.8 million, which they used the 50,000 or 100,000. I can't remember the exact amount to freshen up the departing residents and freshen up the new home that they were moving into. They sold that home within 5 months, and they just paid us off. They didn't need to carry a mortgage or get a mortgage because they had, $2.5 million in equity. So that's another common scenario. Let me see. There might be a couple chat questions that came in. Do you see any chat questions, Todd?
There's just one about, someone missed the beginning of the meeting. Is there a place they can listen to the complete presentation? I was just typing it out. Yes, we are recording this. We will post this up on the Business Builder page. I'll type it in the chat, but you can keep going. I mean, that's an amazing story right there. Somebody has $2.5 million, of equity. They just can't get to it and they want to make a move. And so basically you're allowing them to do that real quick. Again, that goes back to what I guess I was trying to say. It's opportunity.
Yeah.
They had an opportunity for that other single story home in a gated golf community, and they wanted to take it. So
yeah, opportunity and convenience. So as soon as you hear, if in California, you don't see iBuyers as much, maybe in Southern California and Sacramento counties or in the Central Valley. But as soon as you hear a home owner saying, I'm considering an iBuyer, right there, that tells you they're looking for convenience.
Right.
And so cost may not be an issue. So don't be so concerned about the rate, the bridge loan rate, the 9.5 to 10%. That will give them sticker shock. But then when you spell it out in terms of how you can recoup that, or ultimately the fact that you think you can sell their departing residents in 4 or 5 months, then they're effectively paying 4 or 5%. That should help with getting beyond that obstacle.
Right.
So this is the scenario that I talked about where somebody was buying a second home. This is a retired couple who wanted to be closer to their kids and grandkids in Lake Tahoe. They're a Bay Area couple, I believe. And so they wanted to buy a second home. They owned a home along with other investment properties throughout the Bay Area. And but they didn't want to have to sell anything in order to buy a home that came on the market in the same little community in Tahoe City that their kids lived in. So what we did was we provided a loan, not only using the equity. Actually, in this case, I don't think we used the equity in their current home, in the primary residence. We used the equity they had in other rental properties that they owned as collateral for the loan on the home that they were buying in Tahoe City. So short answer is yes. If somebody wants to buy a second home, we can provide the financing for it through our bridge loan. And actually, if they want to buy a second home out of state, we can do that as well, but we can only lend against their California residents. So we have quite a few people boomers who are downsizing and moving to Arizona or moving to Nevada. We've had several who've moved to the East Coast, and we can provide the purchase money, but we're essentially taking a loan against the property that they own in California. Again, if they're selling it, then we're fine with that because we get paid off shortly. So this is actually a little bit of a mix of both using the bridge loan, but somebody who was competing against multiple offers but had no job. So that sounds a little crazy. But in this case, this is somebody who is a successful chief marketing officer, had a career as a CMO with multiple tech companies, is in between jobs, but had a lot of equity in his current home. And he was referred to us, by her mortgage banker and realtor. And we again, as I mentioned, we're common sense lenders. We were like banks were 50 years ago, where we just looked at their past and said, I would bet on this person. They've had a successful career as a chief marketing officer. Unemployment is really tight at the time. we know that they'll land and get another job shortly. And plus, they have a ton of equity in their current home, which is in Mill Valley. So we made them a bridge loan. It closed in 21 days, and 30 days later, they moved out, staged their departing residence, and sold it for $100,000 over asking. So if you ask that person, was the bridge loan worth it? They would tell you all day long that yes, for the convenience, for the ability to actually, they didn't have any other option. They were unemployed, and the bank would say, you know what, show us employment, show us 6 months of employment seasoning, and we'll get you a loan, even if you've already sold your departing residence. How do we know that you're, you're going to have a job? And so we can take a different, more kind of holistic, common sense approach to lending. And we knew that they were going to land on their feet, and they did. Hit us off.
Awesome.
So, and I'll do this, the last success story, and then we'll kind of wind it down with some other bits of information about our bridge loans.
And there's a couple of questions too. We'll answer, Tracy, in just a moment. We'll answer those right after the last success story here.
Okay. So client's realtor contacted us 24 hours before offers were due on a property. So again, this person found the property, came on the market, very hot market at the time. Actually, San Francisco is still a pretty, a really vibrant market. And they needed to be able to make an offer. Again, their current property was still not even listed yet. So we made a loan for $1.75 million and beat out 5 other offers. And we were able to approve them and do a pre-approval within 24 hours. So they refinanced us within 6 months into a conventional loan. Actually, the shortest bridge loan we've ever done was 2 weeks. And it was because they were about to close on a property. The lender needed an extra week, but the listing agent gave them a 24-hour notice to perform, and they were in jeopardy of losing their deposit. We came in at the last minute, were able to close the loan, and they were able to get their conventional loan done, and they refinanced out of our loan within 2 weeks. So,
wow.
Questions?
So, okay, so real quick, Tracy has a question. One of her questions was, okay, we can write up contracts as a cash offer, even though it's a bridge loan, ? And so I just wanted to say, number one, talk to your brokers about everything. You need to run every decision and every practice that you make in your real estate business by your consulting brokers and follow them and their guidelines. And I think what Nam was saying was he's seen that done before. He doesn't condone it.
Yeah.
I think that that's not what you should do. I think that he was just speaking. So anyway, Nam, I don't want to put words in your mouth, but
yeah, no, exactly that. I've seen it done, but more importantly, I think the no sale contingency is the piece.
right.
And if you're making an offer and you talk to the listing agent, as you should, to feel them out, say, listen, this is a no sale contingent offer. So, don't worry about concurrent closing. Don't worry about my client having to sell. And oftentimes, you can have the listing agent call us.
Right.
And which they do. That's a good strategy to put that listing agent and their seller at ease that we have a viable solution. So we often get the call from the listing agent, and we'll say, no, this is solid. We're really comfortable with this, and we can close.
Well, in all your scenarios, the timeframes were very, very fast. So that's just one thing that's a takeaway for me today, is that it's worth a phone call and email to Nam or Pacific Private Money, because you can get answers very quickly on how it will entail. So,
Yeah.
But I just want to reiterate, no, follow all state laws, follow all real estate laws, follow the guidance of your brokers, and run everything by your brokers. By all means. Moving on, are there loan and appraisal contingencies for the new purchase?
So we'll do our own. Well, you can remove the loan contingency. For us, you can remove the loan contingency or no sale contingency because we've approved them. We're going to approve them for the loan when you're making the offer. It's up to you if you want to keep that loan contingency in place, right? Because as a protection for your client. We can pre-approve them, but ultimately, like Todd mentioned, talk to your broker whether or not you are going to, keep have a loan contingency there for some reason. Because sometimes we'll underwrite, and if we discover something at the last minute, like a hidden tax lien or something, then obviously that changes our ability to lend potentially. But we can do a really good due diligence in underwriting the borrower and the departing residents in the property that they're buying. So if we do a loan approval, we're sticking with it at the time we do the approval. So
okay, so going back one slide, Nam, you just had up there kind of in summary, bridge loan scenarios, that one, they have a home to sell, two, they're downsizing, three, there's a down payment situation or a divorce, and, four, to avoid taxes, so, and keeping an ear out, listening for that word opportunity, for the word iBuyer, investor offer, something like that, right?
Yeah, absolutely. So, so the first two are the two primary ones that we see, but you'll also have situations where a family, children inherit a property from their parents, and one of the siblings is already still living in the house and wants to buy out the others. We can do a bridge loan to allow them to buy out the other siblings, and then they can get a conventional loan. Obviously, they should always go with the conventional loan route first. They can, but in some scenarios, it may be held in a trust or the trust attorney. Actually, we actually had the trust attorney as the borrower at one point, and then with the condition that then they would then sell it to the siblings. So it was unusual, but we were able to do it. Perfect. But typically, though, you'll have a bridge loan for. You can't have them for divorce situations where one spouse is buying out the other. Actually, a reverse exchange is where we do bridge loans as well, where somebody has identified the exchange property before they sold their current property. And then also, some people, their down payment option, one of them was to liquidate stock or 401k, but they're going to take a heavy tax hit on that. And in some situations, a bridge loan is a better option. So all things to consider, not just, hey, they have a ton of equity in their home and it's stuck, they want to move up or move down.
Right. Okay, so then going on to the next slide there, and then want to make sure we open it up for questions. So either type your questions in the Q&A, put it into the chat, and if you want to even unmute yourself, just let me know in the chat or the Q&A, and we'll see if we can do that. And want to make sure we're answering all your questions. But Nam, you want to talk about this last, 3 points?
Yeah. So we can close quickly. I mean, bridge loans generally fall under TRID guidelines. So TRID being 21 days. So generally, we like as much time as possible. So when we say as quickly as 5 days, that's when the borrower can show a bona fide financial emergency. And typically, a bona fide financial emergency is their deposit is tied up and they're in jeopardy of losing that deposit because they haven't met the conditions of escrow. They've removed all their contingencies and then something happened. They removed their loan contingency and the bank said, oh, hold on a second. This is actually now going to take another 2 weeks, which kind of leads to the number 2 item, which is conventional fallout. If for any reason a loan falls through for your client with a conventional loan, that's what we've seen. And actually over the last 45, 60 days, a number of our bridge loans came from borrowers who we would have never seen, prior to COVID, because they were A-paper borrowers. When I say A-paper, Wells borrowers, B of A, Quicken, conventional loans, all day long. Great credit, strong assets, but lending got, some of the lenders out there got the rug pulled out from under them. Conventional lenders from institutional capital. So they came to us because they were in the middle of a sale. So conventional fallout is often happens. low or no contingency contracts. That's the other one we just talked about. So there's more. Educate your homeowners on how bridge loans work. Share. We have a flyer, 16 reasons why a bridge loan makes sense, and we'll make that available. Send that to Todd, and I'll show you one of the landing pages we built for HomeSmart agents and brokers. But there's conventional refinance. Borrowers exit out of the loan through a conventional bank refinance. So it's short term, and these are scenarios that you'll probably increasingly see, going back to that stat of how many homeowners in California have a ton of equity. And also, we're not a competitor to banks. Actually, the other half of our business that we get referrals comes from banks because they don't do short-term loans, and our bridge loan sets them up for the refinance. The takeout loan is a conventional bank, so we're friendly to the banks and vice versa. And we always refer clients back to whoever referred them to us. So we're non-competitors to banks. So there's more information available to HomeSmart agents. If you want to learn more, the URL at the bottom there is www.pacificprivatemoney.com/HomeSmart. That'll take you to the landing page where you can download some flyers. You can request information. You can call me, and there's an explainer video that if we have time for, I can show you. But it's a great one to share with your clients, because it puts the bridge loan in a very easy to understand format. And Todd, do we have time? If I play this,
yeah, go ahead and do that while I'm going to type the URL of the landing page in the chat. But I also want everyone to know Pacific Private Money is also inside the HomeSmart Agent Marketplace. We created a new section recently inside of Real Smart Agent on the left-hand dashboard. Left-hand side of the dashboard, we have our transactions, our education section, our marketing section, our calendar, etc. And we've added a new area there called Marketplace. So if you click into that Marketplace, you're going to see we have 7 different categories of tools and resources there to help you. And Pacific Private Money is right there in that Marketplace. So when you go in through the Marketplace, you're going to get out to the same place, the landing page I'm typing in for all of you. But enter it through the Marketplace. That would be a great way to get you to get to it. Otherwise, go to the URL. I'm typing in on the screen. Now I'm go ahead and play the video.
Okay, great. So here you go. Let's see here.
So Nam.
Yeah.
In the lower left corner by your microphone, you should have a little arrow. And if you click on that arrow, one of the things that comes up with the audio, you're going to have to make it say same as system.
Oh, is it unsynced?
Yeah, it just say same as system for us to hear the audio. We were unable to hear the audio.
Okay, let me see. Where's that link?
Lower left corner, you should see a little microphone in your Zoom controls. Not in the URL page you're on, but your actual Zoom controls, where it says mute.
Yeah.
Right next to it, there's a little arrow.
Oh, same as system. Okay, got it.
System, and then replay the video real quick.
Okay. I learn something new every day. Okay, here we go.
And then turn up the volume. All right, so we're still having trouble listening, hearing it, Nam. So here's what we'll do. Let's send the video out.
Yep.
Along with the follow-up. So we'll send them out the 16-point PDF to everyone that attended. We'll also send out the link to the video, and the link to the URL, pacificprivatemoney.com/HomeSmart. So at this time, like if anyone, does anyone have any other questions real quick? Type them into the chat. Nam, do you have anything else yet to add? Tracy says, thank you. Okay, awesome.
Good. No, just really just keep it in the back of your mind in terms of what I was mentioning at the beginning of the call or at the session is that right now, while we're limited in what we can do, it's the time to market. Really, it's to stay top of mind. So, go through your database of clients and let them know that, hey, when the time comes, want to let you know about certain opportunities or certain strategies that you can do if you found the next home, and you haven't listed yours yet. So you just want to use the time to really create that awareness and top of mind, awareness for you to be the first person they think of when things kind of return to normal. And get that list from your title companies. That's something that they're probably not as busy as they normally are. So hit them up for as much information as you can.
Yeah, let's go pull those numbers now that you were talking about for Modesto and Fresno, and let's get those over to Todd and everyone. And then, because the amount of people who have that 50% equity, 70% equity is amazing. So we'll take a look at that. There is one final question coming in real quick. How about lower credit scores, 600 to 650? Are these IBL available?
Yes, we've done low credit scores. We're more, obviously that could impact it. We want to understand why, but more important to us is the equity that they have in their current home and whether or not they can refinance out of our loan. So, we underwrite twice, one for our loan. Can they afford our loan for that short term? And then two, will that low credit score impact their ability to refinance to get a conventional loan? But if they have a lot of equity in their current home and they can pay us down or pay us off completely once they sell their departing residence, then the credit score may not be an issue. So short answer is it depends, but I wouldn't rule out a low credit score as a reason to not make a loan to that person.
Right. Awesome. Well, hey, everyone, just so if you would like to see a full recording of the session today, I'm going to type the URL again in the chat for all of you. You're going to go to homesmart.com/business-builder, and you'll also be able to you'll be able to see the recording there in full if you came in late. And then I also, Nam, I hope it's okay, I typed your contact info into the chat so everyone can also contact you. You can also enter pacificprivatemoney.com/HomeSmart. So, or enter through the marketplace, get engaged with them. So, Nam, thank you so much. This was so interesting, and obviously some great options for everyone, especially in that iBuyers space, or else the buy then sell. And several of the other unique opportunities. I mean, fix and flip, opportunities that are out there as well. So hope this was helpful to all of you. Nam, thank you much for joining us here today. And this is, our business builder. Nam, you have any parting words real quick?
Yeah, just stay safe. I mean, we're here. We haven't slowed down at all. In fact, we're busier. But again, we're here to help. But also, if you just want to learn more, just call. You don't have to have a scenario. You can always happy to talk through how to be more successful. Have a special place in my heart for HomeSmart. So
yes, you
love
do.
the company.
That's awesome. And likewise, us for you. So thank you, Nam. We really appreciate it. So thank you all for joining us today. I'm Todd Sumney with HomeSmart. This has been our Expand Your Brand Business Builder with Pacific Private Money, and we hope you enjoyed the webinar today. Go to www.homesmart.com/business-builder to get a full copy of this presentation later or to listen to it. So thank you all. Hope you have a great day, and we'll see you